Subcommittee on Housing and Insurance will come to order. Today's hearing is entitled The Cost of Regulation on Affordable Multifamily Development. Without objection, the chair is authorized to declare a recess of the subcommittee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. Without objection, members of the full committee who are not members of this subcommittee may participate in today's hearing for the purpose of making an opening statement and questioning our witnesses. The chair now recognizes himself for 5 minutes for an opening statement. I first want to welcome our witnesses and thank them for participating in today's hearing, looking at the cost of regulation and barriers preventing affordable multifamily housing development. I've read your written statements and appreciate the time and effort you put in providing your insight to the subcommittee and to the committee as a whole. The lack of development is especially concerning because while we continue to enjoy some of the lowest unemployment rates in our history, people are having trouble finding affordable housing in areas where jobs are being offered. The Wall Street Journal ran an article on May 30th of this year entitled, "Rural America Has Jobs, Now It Just Needs Housing." The story starts with a man who was offered a job in Nebraska, but had to turn it down because he couldn't find affordable housing to rent. That man ended up staying in Iowa at his current job, and he was making $2 less an hour without benefits. So if he had housing, he could have got a pay raise and benefits, but because there was inadequate housing, he wasn't able to take advantage of that opportunity. Another compelling fact from the article highlighted some housing and job numbers. So get this, there were over 990 job openings in Platte County, but only 65 homes available for sale in the median listing price. On the tails of the Wall Street Journal article, 2 of the organizations testifying today issued a study about the cost of multifamily development. That study reported that regulation from all levels of government, so federal, state, local, account for an average of 32.1% of multifamily development costs. 32.1% of the cost. Today, I expect to hear our witnesses dive deeper onto what those costs really are. It seems a majority of the costs highlighted in the study are at the local level, where building codes and zoning laws are handled, while other costs are the result of requirements from HUD relating to fair housing or ADA compliance. While we want to be sure that we are protecting our most important financial investments from catastrophic disasters, we also must recognize that building codes add to construction costs, which in turn increases the cost of housing. Testimony from both the National Multifamily Housing Council and the National Association of Home Builders states that on average 7% of regulatory costs come from building codes changed over the past 10 years. Mitigation is something I'm a strong supporter of. We on this committee have worked on a comprehensive flood insurance bill this past Congress. Like many things, it passed the House and hasn't passed the Senate yet. We're ever hopeful. But doing that work, we saw that for every dollar spent on pre-disaster mitigation, it saves $4 on recovery costs. There are clear benefits to building codes. No one is disputing that here. Building codes are important, but making sure we strike the right balance is critical. And when the pendulum swings too far over and costs increase too much, what should be affordable all of a sudden becomes unaffordable for so many of our constituents and American families. While some people make protecting their homes a top priority and spend more than others on construction costs, we must ensure that homes already being built to code are not being impacted by local authorities with additional regulations or red tape. Now, Mr. Schlomer highlights several specific examples in which building codes, zoning issues, or permitting approvals have impacted multifamily development projects. I point him out because he is from the great state of Wisconsin and appreciate him being here. Some of those examples include instances in which cities have required you to pay for the entire cost of a traffic signal, as opposed to the community living in that neighborhood paying for the traffic signal as well. Or upsizing a water main for an unknown future development unrelated to the project that you're building at that point in time. You said another example in which a municipality in Texas revised 3 of its zoning districts to specifically exclude multifamily as a permitted use. It's these specifics that help paint a picture of what you mean by regulatory barriers to building. Before we get to your oral statements, I want to thank you all for coming and testifying today. Again, this is a time for us to hear from you in what the right balance is for us, and what role do we have at the federal level, and how this policy trickles down to the state and municipal levels. What we want to do, again, is have smart codes, but not too many codes that increase the cost of building, which, again, affect our families and the most vulnerable among us. So with that, I yield to the ranking member, the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman, and I appreciate as well your willingness to come and help us as we go through this very difficult issue. The nation is facing a steady and dramatic decline in available and affordable housing periods. Certainly multi-family housing is included. And it's hard to imagine that it's been a decade since the housing crisis of 2008. I sat in here with maybe a few people who are here now, Mr. Green. All of us on this side were here. And it doesn't appear as if it's that long ago. But the economy has greatly improved since that time, and many families, particularly in minority communities, were never fully able to recover from that crisis. The demand for rental units vastly increased in the years following the Great Recession, and the availability of affordable rental units has not kept pace. In addition, millennial adults, burdened, as my children will often say, with high student loans and limited job opportunities, they've put off home ownership, and they have made conscious decisions to stay in the rental market. And so that has contributed to the growing rental affordability crisis. According to the National Low Income Housing Coalition, quote, "There is no state, metropolitan area, or county where a worker earning federal minimum wage can afford a 2-bedroom rental home at fair market rent by working a standard 40-hour week," unquote. I was the mayor of Kansas City for 8 years, and I became very, very familiar with the challenges associated with developing affordable housing options. This is a challenge that is not only in existence in the urban core, but I represent a large rural area of Missouri. And there are some towns in my district where they've not been able to have a single new unit constructed in a decade. And so it is an issue that I'm concerned with, but it also brings into play some other issues like what are we going to do with the programs like HOME, CDBG, the National Housing Trust Fund, and the low-income tax credit. These all must be preserved and, in fact, enhanced if we're going to deal with this crisis. And so, Mr. Chairman, at this point, I would yield to Mr. Sherman for the remainder of the time.
The rent's too damn high, the paycheck's too damn low. Nothing we do is going to make housing affordable unless we increase supply. We cannot repeal the law of supply and demand. By first world standards, Europe, Japan, the United States, we have more square footage of housing per person by far than any of them. But we live in larger units, and we need the number of units that we have for the family units. This hearing is somewhat mistitled in that it says the cost of regulation. There's also the benefits of government involvement, including especially FHA, Fannie and Freddie loans and Section 8, and if we took those away, housing would be less affordable. And in addition to the costs where you actually write a check to pay for regulation, you also have the density limits and the zoning and the prohibition. And I'm not sure that that's even included in the 32%, I believe, that was cited by the chairman, because it doesn't cost you more to build a 3-story building than a 5-story building, but But if you can't build a 5-story building, you can't pay for the land. I look, in my state, we're going to require that all new housing have solar panels on it. Now, if lenders will factor that in and say we'll lend more to build those units because the landlord and or the tenant won't have the electric bill, and if in fact those solar panels create enough kilowattage to pay for themselves, that may be a good thing. But assuming not, assuming that you just look at how much rent is provided and how much it costs to build the unit, this will mean fewer apartment buildings will be built in the state that has the greatest housing crisis. So I look forward to hearing from our witnesses how we're going to have enough housing units and how we're going to prevent NIMBYs from prevailing, except in my district. I yield back.
The gentleman yields back. We now welcome our witnesses. Our first witness today is Ms. Sue Ansel, President and CEO of Gables Residential on behalf of the National Multifamily Housing Council. Welcome.
Thank you very much.
Next witness is Ms. Erica Potig. I hope I'm saying your name correctly. Vice President and Chief Financial Officer at the Urban Institute. Next witness from the great state of Wisconsin, Mr. James Schlamer, is the Chief Executive Officer at Continental Properties Company. Welcome. And our final witness is Mr. Stephen Lawson, Chair of the Lawson Companies on behalf of the National Association of Home Builders. The witnesses will in a moment be recognized for 5 minutes to give an oral presentation of their written testimony. Without objection, the witnesses' written statements will be made part of the record following their oral remarks. Once the witnesses have finished presenting their testimony, each member of the subcommittee will have 5 minutes within which to ask all of you questions. You will note that on your table there are 3 lights. The green light means go. The yellow light means you have 1 minute left. And obviously, when the red light turns on, that means your time is up. The microphones are sensitive, so make sure you are speaking directly into them and make sure that they're actually on. With that, Ms. Ansel, you're recognized for 5 minutes.
Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee, it is my privilege to appear to you today on behalf of the National Multifamily Housing Council and the National Apartment Association to discuss regulatory barriers to developing multifamily housing and their impact on reaching our shared goal of addressing our nation's rental affordability challenges. I am the chairwoman of NMHC and Chief Executive Officer of Gables Residential, a vertically integrated real estate company specializing in development, construction, ownership, acquisition, financing, and management of multifamily and mixed-use communities. Gables manages over 30,000 apartment units and over 430,000 square feet of retail space. I see the harmful impact of our nation's antiquated, duplicative, and costly regulatory systems on a daily basis. As outlined in a recent study by NMHC and the National Association of Home Builders, 32% of multifamily development costs are attributable to local, state, and federal regulations. And in a quarter of the cases, that number can reach as high as 42.6%. It is not easy to build apartments. It can take up to a decade just to break ground. Outdated zoning laws, unnecessary land use restrictions, arbitrary permitting requirements, inflated parking requirements, environmental site assessments, and more discourage housing construction and raise the cost of those properties that do get built. Localities impose a variety of fees on new housing, including impact fees, inspection fees, property taxes. Inclusionary zoning mandates and rent control rules further discourage housing investment. These time and cost burdens lead to fewer homes being built, and the apartments that do get built require higher rents to cover the high cost of development. Make no mistake, smart regulation plays a critical role in ensuring the health and well-being of the American public, but well-intentioned local, state, and federal regulations are too often onerous and cumbersome and increase development and operational costs, sometimes forestalling development altogether. My written testimony outlines in detail a host of barriers to development and examples from across the country where red tape has driven up project costs for both apartment construction and renovation. For example, in Texas, Gables was required to replace and increase the capacity of a storm line by 75% in conjunction with the development of a site and to help address community flooding unrelated to the project. This resulted in 2 months of additional permit time, 30 days of additional build time, and $250,000 in additional costs. While the example I cite is a local requirement, federal regulations also result in additional costs. The aforementioned cost of regulation study found that complying with federal requirements added significant development costs. For example, OSHA requirements account on average for 2% of building codes, total project costs, while costs associated with the changes to building codes, which are developed in conjunction with federal government, accounted for on average for 7% of the total development cost. My written testimony includes a variety of solutions that would reduce regulatory red tape impacting the development and operations of multifamily properties. It should be noted that what works in one jurisdiction might not work in another, but utilizing outside-the-box thinking and innovative solution-oriented approaches can lead to progress. Some local solutions include establishing by-right zoning, reducing parking requirements, or providing fast-track permitting approval for affordable housing developments. Federal policy solutions range from incentivizing local and state governments to partner with the private sector to boost housing production at all price points, to making common sense, modest changes to the Community Reinvestment Act to remove impediments to obtaining credit for workforce and affordable multi-housing. Additionally, Congress could further improve and streamline Section 8 Housing Choice Voucher Program to make it easier for property owners to participate and provide increased and adequate funding for subsidized housing programs. The National Multifamily Housing Council and National Apartment Association estimate that we need to build 4.6 million new apartments by 2030 to meet demand. Meeting that demand will require both revamping how we build apartments and the courage of policymakers at the federal, state, and local levels to implement inventive policy ideas, provide incentives, and reduce impediments. On behalf of the apartment industry and our 39 million residents, we stand ready to work with Congress to ensure that every American has a safe and decent place to call home at a price that enables individuals to afford life's necessities. Thank you.
Thank you. Ms. Potig, you're recognized for 5 minutes.
Thank you, Mr. Chairman, Ranking Member Cleaver, and members of the Housing and Insurance Subcommittee for the opportunity to be on this expert panel. My name is Erica Pothig, and I am Vice President and Chief Innovation Officer at the Urban Institute, which is based here in DC. We are a nonprofit research organization dedicated to the power of evidence to improve lives and strengthen communities. The views expressed before you today are my own and should not be attributed to the Urban Institute, its trustees, or its funders. Nearly every county in the United States lacks enough affordable rental housing to meet residents' needs. With expanded rental demand since the Great Recession, this crisis is particularly urgent for extremely low-income households and living in rural, suburban, and urban counties, in the heartland and on the coast. Because of the widespread nature of this problem, increasing the supply of affordable rental housing deserves national attention, and I am so glad that you are holding this hearing today because I believe this issue deserves that kind of attention. But, and while regulatory reforms can play an important role, they are not sufficient to fully address America's affordability challenge. When considering regulatory reforms, I want to make 3 points. First, the multifamily housing supply challenges we face are the result of a market failure. It simply costs more to build and operate rental housing than many low-income Americans can afford to pay in rent. In fact, 11 million households pay more than 50% of their income in rent. That's a quarter of all renters. Public investment and subsidies are necessary to bridge the cost gap and meet the needs of extremely low-income renters, which account for 70% of these households. Second, exclusionary zoning and exclusionary practices increase the cost of development, drive economic and racial segregation, and are grounded in the legacy of racial discrimination. Promoting more inclusive housing development will help lower development costs, integrate neighborhoods, and begin to repair a long history of racial discriminatory practices that still play out today. Third, not all regulations are the same. Many housing regulations are grounded in efforts to protect public health and well-being, and a growing body of research links housing to health outcomes, with ample evidence that healthy housing regulations protect children and older adults. Policy changes to reform regulations should retain and expand measures to protect health and well-being. Between 2010 and 2030, there will be 5 new renter households for every 3 new homeowners. This increase in demand, coupled with regulatory limits on housing supply, puts pressure on rents. These costs that are costs that the lowest income Americans, like older adults on fixed incomes, can least afford. While removing barriers to multifamily development, such as exclusionary zoning, would increase supply and lower development costs, our research shows that these reforms would not be sufficient to close the gap for millions of American families. We need to expand rental assistance to all eligible households to increase housing stability. Exclusionary zoning and discriminatory practices come at a real cost to people. Economic and racial segregation results in unequal distribution of access to opportunity and exposure to harm. As my colleagues found in studying 20 years of data in Chicago, higher levels of economic segregation and black-white segregation were associated with lower per capita income for blacks, and additionally, higher levels of black-white segregation were associated with lower levels of educational attainment for both blacks and whites, as well as higher homicide rates. This is exactly why the requirement for communities to affirmatively further fair housing is so important. Without a requirement to facilitate inclusive communities and housing, homeowners of all political stripes oppose change at the expense of low-income renters and people of color. And research shows us that allowing and encouraging builders to create housing that expands choice for all households is a win-win scenario. We need a more balanced housing policy in this country that combines reducing local regulatory barriers to multifamily development, expands federal rental subsidies to all those that qualify, promotes healthy housing, and fully implements the obligations to affirmatively further fair housing. I hope this testimony shows that rationalizing local zoning and supporting the housing needs of our lowest income neighbors will benefit every community across the nation. Thank you for this opportunity to testify before the committee. I'm happy to answer any questions that you have.
Thank you, Mr. Slamer. You're recognized for 5 minutes.
Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee, thank you for this opportunity to discuss regulatory barriers to affordable housing development. These barriers pose significant challenges for developers of apartment housing nationwide. I'm Jim Schlamer, Chief Executive of Continental Properties Company. We develop apartment communities across 24 states and are recognized as one of the largest apartment developers in the country. Continental Properties has a unique business model in the industry. We are a production builder of reasonably priced, workforce-attainable apartment homes, delivering over 3,000 new apartments each year. In contrast to recent urban core development trends, we build only in suburban and second-tier markets, some of the nation's most underserved. Employing prototypical designs for all locations, we gain efficiencies in construction and operation that allow us to reduce costs, resulting in 51% of the apartments in our portfolio offered at rents affordable to households earning just 80% of area median income. This is a rare price point for new home construction, and we believe that a 5% reduction in our development costs would allow us to offer 62% of our apartments at rents affordable to households earning 80% of AMI. Our apartments are not subsidized, but nearly all of our apartment communities are financed with mortgages issued through a GSE. The mortgages issued by the GSEs for multifamily financing have proven to be safe and effective in encouraging the creation of new multifamily housing. In Continental Properties' experience, the GSE-sponsored mortgages have supported our ability to provide new apartments at workforce-attainable rents. Over the past 5 years, the cost to develop apartment homes has increased dramatically faster than rent increases in all 24 states in which we do business. This trend cannot be sustained. Unnecessary, overly burdensome policies create significant barriers to development of apartment homes. Their impacts increase the cost of development, restrict supply, and ultimately raise monthly rents. Our industry and our company are constantly seeking ways to control development costs. Easing regulatory burden is a critical consideration as we explore solutions to close the affordability gap in America's housing. We regularly face hurdles intended to deter apartment development at the local level, and even well-intentioned policies promulgated by state and federal authorities can inhibit apartment development. My written testimony includes detailed examples of these challenges. Significant barriers exist in zoning rules, permitting systems, gratuitous infrastructure demands, onerous building codes, and land use requirements. The entitlement process is often structured against multifamily housing, rarely permitting by right development. Municipalities employ arbitrary code interpretation and impose open-ended community demands. It's not uncommon for jurisdictions to deny rezoning requests for multifamily development, despite documented, substantial housing needs in those very communities. In one case, contradictory decision-making added 8 months to our approval process and increased our total project costs by over 3.5%. Municipalities are also increasingly looking to pass along future infrastructure costs to developers. While some infrastructure enhancements around a development site may be mutually beneficial, jurisdictions often exploit developer resources and, by extension, burden renter households. Frequently, arbitrary mandates on dwelling size, project density, or site features like enclosed parking unnecessarily increase development costs. Federal regulation can significantly increase the cost of affordable apartment development. For example, while apartment providers strongly support the goals of federal accessibility laws, provisions that exceed practical needs for accessibility and impractical enforcement policies drive up costs. Compliance is so complex that developers often employ consultants to guide conformance. Regulations fail to consider conditions that impact sincere compliance intentions, such as topography, limitations of construction materials, and construction tolerances. By better aligning requirements with consumer needs for accessible homes, development costs could be significantly reduced while continuing to protect the needs of disabled residents and guests. Housing affordability is a critical issue. I applaud your efforts to address this problem. Policymakers at every level of government have a role to play in removing obstacles to housing production and providing a supportive environment for the creation of affordable homes. Thank you.
Thank you. Mr. Lawson, you're recognized for 5 minutes.
Thank you, Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee. I appreciate this opportunity to testify today. My name is Steve Lawson. I'm chairman of the Lawson Companies and also a third-generation home builder and multifamily developer from Virginia. I also serve as the chairman of NAHB's Multifamily Council. Home building is one of the most regulated industries in America, and while there's a very necessary role for sensible regulation, the cost of excessive regulation creates a tremendous burden to the production of affordable housing. NAHB and NMHC produced a joint study to raise awareness of how much regulation currently exists, how much it costs, and also to encourage governments to thoroughly consider the implications for housing affordability when proposing new directives. The study found that on average, nearly 1/3 of the cost of multifamily development is attributable to local, state, and federal regulations. The top regulatory barrier determined by the joint study was the compliance with increased building code requirements. These account for 7% of total development costs. Agencies such as the DOE, EPA, FEMA, and HUD have used the code's development process to advance their policy goals. In the recent Energy Code hearings, DOE testified and gave public support for code changes that would have removed flexibility and increased costs without improving energy efficiency. Inclusionary zoning policies are another costly barrier that require developers to subsidize a specific percentage of total units within market rate developments and set income-based rent controls for the subsidized units. IZ, as it's called, has become the preferred or only method, it seems, of achieving fair housing goals. However, IZ acts like a tax on housing, and when it's used, it adds 5.7% to the cost of development. In fact, the burden of the subsidized unit actually raises the cost of the market rate units, which results in pricing out the middle class. Trade issues, such as the imposition of a softwood lumber tariff on imports of lumber from Canada, a shortage of skilled labor, local land use challenges, and NIMBY opposition often kill the development of affordable housing before it even is begun. For example, the joint study found that 85% of developers experienced added costs or delays due to neighborhood opposition. Additionally, the home building industry is experiencing a major labor shortage. In a recent NAHB survey, 84% of builders identified the labor shortage as a problem, which makes it the industry's top concern for 2018. What we see on the ground is that the skilled labor force is aging and new workers are not entering the trades. We need to encourage careers in construction. These are good, family-supporting jobs, and NAHB is pledged to educate and train over 50,000 new workers over the next 5 years through our workforce development arm, the Home Builders Institute. The ability of the home building industry to address affordable housing needs is dependent on a housing finance system that provides adequate and reliable credit. NAHB urges lawmakers to consider the critical roles that the GSEs, FHA, USDA, and other entities play in the housing finance system, and take into consideration multifamily development's access to credit while examining legislation for housing finance reform. Lastly, while regulatory reform will help us lower development costs, to reach lower-income households, it is financially infeasible to build new, affordable rental units without federal assistance. Regulatory reforms are not a substitute for programs like the Low-Income Housing Tax Credit, Project-Based Section 8, Home, or CDBG. I would also be remiss to have this opportunity and go without applauding the New Democrat Coalition for releasing a white paper earlier this year, which seeks solutions to the chronic problems facing the housing industry. NAHB looks forward to working with them as they continue to help grow and support affordable housing. Thank you again, Mr. Chairman, for the opportunity to testify today. We appreciate your efforts to examine regulatory burdens, and we look forward to working with you to expand the availability of affordable housing.
Thank you, Mr. Lawson, and I thank the whole panel for their oral testimony. The chair now recognizes himself for 5 minutes. And Mr. Lawson, I think you bring up a good point in regard to the need for more young people to get into the trades. I think the home builders were at the White House about a month ago on that very issue, committing to train more young people to make sure that as folks retire, they're being replenished with really good paying jobs. I suppose that's a different hearing, though, so I'm not going to get into that, but I want to commend the home builders for that. It's a problem we're having across the country. So to the panel, we're saying, I think the study that you cited, 32% of the cost of multi-family projects is from regulation, correct? So is this 32% or a third of the cost, is that from stupid regulation, smart regulation, or a combination of both? Because I'm asking this question because if we're in Florida, I want certain regulation in regard to flooding. I want certain regulation in regard to hurricanes and wind, right? Which is going to obviously increase the cost of a home in Florida. If you're able to break that 32% down, is it what percent of that is overregulation versus appropriate regulation? Maybe if, Ms. Ansel, can you answer that question?
Sure, happy to. Thank you for the question. I think it's a combination of both smart regulation and overburdensome, antiquated, duplicative regulation.
Keep going with that.
So it's hard to put a specific percentage to that, but often I don't think look at it's a combination of local, state, and federal regulation that is often conflicts with each other, is duplicative, creates additional time and burden for that. So, overbroad regulation would be what I would declare as the biggest problem. So I think we need to very carefully look at the unintended consequences of the regulation. Smart regulation is important. It is important. We've always been supportive of that. But it's time to take a look at specific regulation and see what the true unintended consequences of that.
Mr. Slamer or Mr. Lawson, either one of you?
I would share Ms. Ansel's response that it's a combination of appropriate regulation. The examples you cited for hurricane protection, for example, in Florida is entirely appropriate. But as I cited in one of my examples, if we just reduced our cost by 5%, we think we could increase the amount of housing available to families earning less than the area median income by 20%, by 11% of the number we currently do. And that isn't an unreasonable target to be shooting for. 1/6 of that regulatory cost to be reduced, to be reconsidered, I think is an appropriate target, and it certainly represents a number that is realistically within the unnecessary or overburdensome regulation.
Mr. Lawson?
I would agree with the previous speakers and also point out that I think we need to consider the cumulative effect of regulation. I'm certainly not, I probably didn't coin the phrase, but I've heard people say regulatory creep, and that is we add one more regulation one year, which is a good idea. The next year, it's another good idea. The year after, it's another good idea, and so on and so on. And I think what's happened is we've now found ourselves in a place where the cumulative effect is detrimental.
So, Mr. Lawson, are you in the business of doing projects to lose money?
No, I am not.
No. Is anyone, Ms. Ansel, Mr. Slamer?
We are not.
I didn't think so. So, obviously, you're going to pass these increased costs on to your renters, right?
We are required to.
Right. And so, when we have increased unnecessary costs of projects due to regulation, in the end, the people that we're trying to help, those who need affordable housing are the ones that are hurt the most. Is that not fair? And Ms. Pothig, I appreciate your testimony, and you hit a wide range of things, and I think there's Mr. Cleaver, as you were testifying, where we were talking about your testimony, and I think he's going to hit on some of the issues as well. But you'd agree with this as well, that we want to strike the right balance in regard to regulation, right?
Yes, and I think it would be important to study the cost and benefits of different regulations, because I do think they provide some societal benefits, some health benefits, some other kinds of benefits to well-being, and we want to take those into account, because I think the trade-offs you're raising are really important in terms of both affordability, but also let's think about some of the other benefits that regulations might be providing as we think about ways to rationalize them.
And I think that's important for us to look at. And every regulation probably has a do-gooder and pure heart behind it. But if we have so many regulations that do so many great things, but they cause the cost to rise so much that people can't afford to get into the residence, that also is a problem. And I think we have to look at, what's good policy, but what's affordable policy as well. Sometimes if we don't all need to have, BMWs. Sometimes we just might want a Yugo to go. I don't think they make Yugos anymore, but sometimes you just need a simple car to get you to work, or a motorbike. And especially if you can't afford a high-end car. My time has expired, but one maybe question you guys can respond to in writing is, obviously we're very cognizant of the lanes of the federal government, the lane of the state government, and the lane of our municipalities. And a lot of us don't like to cross that lane. But if you have advice to us on maybe what we can do on the federal level to, through the whole spectrum, from us on down, how we can streamline this approach, I would welcome your insight on that, on how we can lead the way to have an impact up and down the food chain, if you will. With that, my time is long expired. I now recognize the ranking member from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. I'm going to be beating up on myself on this a little. I may be the only former mayor here. But as we're talking about the regulations, the truth of the matter is most of the regulations would actually have nothing to do with the federal government. Most of the regulations are municipally handled, and to some degree, a few, the state government, but most of them are municipal. I was in San Francisco over the weekend, and a city that's, I think, 7.5 square miles, and you know, they have less than 10,000 people moving in 10 years because they can't afford to move in there. So the price of housing has just gone, and my analysis of that is that the city made some horrible zoning decisions that made it possible for or reduce the chances of people with low incomes to move in. So I connect that in many ways with the need for fair housing, you know, and I think that Brookings Institute study is rather clear. If you have poor fair housing decisions, you're going to end up with also the municipalities making decisions that would also eliminate if they also eliminate really serious fair housing issues, you're going to wipe out any opportunities for people to come in and build new housing and buy new housing. That's just the way it is. Am I putting too much in on the fair housing issue? You know, and should we be, as a federal government, you know, in any way sending signals back to municipalities and state governments about, you know, what they need to do? We have some issues. I think we need to have low-income tax credits. I think we need more money in CDBG because it offers municipalities opportunities to use flexible dollars from the federal government. We need 202 loans for senior housing. All of this, but can you focus a little on the fair housing issues, and a little, if you would, on what the federal government could do to impact local government, and are we trespassing? Yes.
Thank you, Ranking Member Cleaver. I see these two issues as absolutely connected, and my written testimony goes into greater detail because of the history of racist and discriminatory policies at the local level that are tied to the zoning practices and to redlining. The limits that we see on multifamily development are entwined with fair housing issues. So the affirmatively furthering fair housing rule was absolutely intentioned to enable local communities to really evaluate and assess those policies to look for ways in which they could improve the environment for multifamily rental housing, but also to increase access to opportunity for all residents in the city. And I think we have to understand the history that led us to where we are today and the connection between fair housing and the limitations on multifamily development to see the benefits of the affirmatively furthering fair housing rule to stimulate more rental housing.
San Francisco is second largest, or is the largest city in California? Which one is? I'm not sure. But the weird thing about it is that it is a city that is only 6% African American and dropping, by the way. And every decision made by the city council, unless it's with great intentionality to create opportunities using fair housing as the motivation, we're going to see one of our largest cities in the country with virtually no minorities, or at least no African Americans. I think there's a large population of Asians. And I'm hoping that from this discussion, and if we had time, I would really like to know, are we trespassing? Or should this hearing be done in city halls around the country instead of here in Washington?
Ranking Member Cleaver, if I might add, National Multifamily Housing Council and NAA have always been strong supporters of fair housing. We believe in it completely. The issue we have is there's not enough supply in our communities, in our apartment homes. And so we need to find ways to reduce the costs. The additional and overburdensome regulation reduces the amount of new multifamily homes that are built.
In cities? You're talking about cities?
In cities. Well, throughout, in cities and in rural areas as well. And so I think there is a piece that the state, the local, and the federal government can play in this. I don't believe that we're overstepping our bounds. I think the federal government can look for ways to incentivize local and state governments to partner with private organizations to create the opportunities to build more apartment homes. Additional supply will solve many of the problems that we have discussed here today. And there's a number of steps that we can take to do that.
The gentleman's time has expired. The chair now recognizes the vice chairman of this subcommittee, the gentleman from Florida, Mr. Ross, for 5 minutes.
Thank you, Chairman. I thank the panel for being here as well. You know, we are here today not to talk so much about regulation in and of itself for the housing industry, especially the multifamily industry, but also the overburden caused by certain regulations. And I think that the title is correct. It's the cost of regulation on affordable housing. The cost should have a return, and that return should be quantified objectively by assessing the health, safety, and welfare of those that we're trying to protect. For example, in Florida, in 1992, we have Hurricane Andrew. We realized that our housing stock was flimsy as could be. We imposed the nation's strongest building code, but as a result, we've had a great return. Lower insurance premiums, but most importantly, we've kept people from being displaced from having to lose their home, including in a multifamily housing. You look at Louisiana, for example, that lost a congressional seat as a result of Hurricane Katrina because so many people were displaced. But what I want to talk about here is I think it's important that we consider regulations that increase the cost of capital used for multifamily housing development. In what ways do regulations that increase the cost of financing for these projects, costs that are no doubt passed along in some form to the end users, complicate efforts for affordable housing? For instance, Mr. Schleimer, would you agree that various regulatory rules relating to financing, such as the classification of high volatility commercial real estate or HVCRE loans, impose hidden fees on potential housing process and lead to the impediment of better housing projects?
I think the short answer to that question is yes, I would agree. With the introduction of that particular policy, one of the things that we saw was a reduction in availability of bank-originated construction funds.
Yeah, the increased capital requirements, you know, with a loan to value of greater than 80%, and you're impeding the ability to meet a demand that the market has thrust on your industry.
The cost of the equity component of the financial stack, the capital stack, is much higher than the debt portion, and so therefore by increasing the amount of equity capital that was put in, it increased the overall capital cost.
And then to piggyback on the ranking member, Mr. Cleaver, I think the federal government may be, in its own subtle way, increasing its regulatory influence on the multifamily housing just through the finance regulatory scheme. Would you agree?
Yes, I would.
Mr. Lawson, although local governments generally have the authority for building codes, your testimony states that federal and state governments are becoming increasingly involved in the process. Do you have some examples of the federal government becoming more involved in the local building code process?
This is something that our staff has worked on in great detail. So I can't say I'm the most knowledgeable, but I do know that that the Energy Codes Department or the DOE through the Energy Codes process has taken a
imposed a higher burden,
but taken a very prescriptive approach instead of a more performance-based approach, meaning advocating for certain ways to achieve energy gains, energy efficiency gains, when what we advocate as the industry is give us a performance measure
and let us meet
to achieve, and let us figure out the best way to do that instead of picking winners and losers within the building supply category.
I appreciate that. Let me follow up on something in your earlier testimony too that I really want to hit on. And you talked about labor shortage. And I've been very concerned about this because I've talked with my road builders, I've talked with construction, I've talked with many of the service industries out there, and the lack of skilled labor is adversely impacting our ability to sustain the GDP growth we're now experiencing. You've talked about increasing careers in the construction arena in skilled labor. Let me ask you this specifically. That's a long-term program, and I think it's a very valid program that I support strongly in vocational training in skilled areas. But what about the use through an H-2B program, increasing the H-2B program so that we can meet our immediate labor shortage with foreign nationals coming here for temporary purposes? Is that something that you think would be supportive for your industry?
Absolutely.
I appreciate that. Ms. Ansel, in your testimony, you note that the issue of rent control can be counterproductive and can serve as a disincentive to investing in developing the diversity of housing units that a community requires. Are there policy alternatives that you would suggest to rent control or ideas that local governments can consider instead of rent control? And I've got 2 seconds.
I think there are a number of policy options that are available. We talked a little bit about different ways. Again, I go back to the issue. Why rent control is a problem is because it is against economic forces of supply and demand, and it will serve to reduce the amount of supply of new apartment homes. The things that we need to do is to find ways to increase the ability for apartment developers to create more supply. That will have the biggest impact on our ability to reduce rents and create more affordable and workforce housing.
Thank you. I yield back.
The gentleman yields back. The chair now recognizes the ranking member of the full committee, the gentlelady from California, Ms. Waters, for 5 minutes.
Thank you very much. I appreciate the opportunity to share some of my thoughts. You know, having listened to some of the presentations that have been made, and particularly reading Mr. Slomer's testimony, I am absolutely moved to first say that most of the members of this committee are committed to the proposition that we have to have more multifamily housing. I believe that this could be and should be a bipartisan issue because I think all of our communities all over this country are impacted by a combination of things that all of you are identifying. And I'm wondering if we could ask you to join with us in helping to eliminate some of these barriers, because I think that you have the knowledge, you have the background, and you understand how all of this works. And while I've not had an opportunity to talk with my ranking member of this subcommittee or any other members about this, just looking at this, these presentations, let me just say this. We are focused, particularly on this side of the aisle, for support for infrastructure development and the funding by the federal government to improve the infrastructure of this country. And while a lot of people think about that in terms of, you know, issues like repairing bridges, developing new water systems, as I look at the testimony, I think there are a lot of things that can be done with infrastructure development and repair that would ease some of the burdens for the development of multifamily housing. In looking at some of this testimony where you're required to paint fire hydrants and to, and even though it wasn't said here, I talked with a developer that had to move a big pole that had to do with the electricity distribution and all of. I think that should be part of what we pay for with infrastructure. Infrastructure helps to reduce the costs and makes it easier for developers if they did not have to be involved with other areas other than getting that housing developed. And so I would like you to think about that and think about, as we move toward support for infrastructure development in the federal government, what can you identify that could be included in infrastructure development that would reduce the cost of multifamily development in ways that make good sense? The other thing I'd like you to think about is this. A lot of this has to do with the locals. And whether we're talking about zoning laws or other kind of laws that basically discriminate, or whether we're talking about systems that don't work, where someone can have something sitting on their desk for a month and not move it, in permitting, et cetera. I'd like us to think about incentives, real incentives for locals to get rid of these impediments to development. You know what many of them are, and you have experienced many of them. Now, I've heard a lot of talk about one-stop shops that could expedite permitting and all of that, but I don't know if they really work as well as they should. I think some of the ideas are good, that they want to have one-stop shops, but in some of my cities, they have one-stop shops, but they don't do any better than when they were not one-stop shops. And so what can be included in this permitting and other kinds of things that you have to go through that would help to expedite the process? I believe that we can come together around these issues. And I believe that all of us must be committed to the proposition that we can develop low-income housing. I, at the federal level, support, of course, Section 8 and subsidies and the Housing Trust Fund and all of that, because we need money. We can't do it without the dollars. And if we can get together and support the dollars that are needed, then I think these other kinds of ideas may go a long way to reduce that cost. I think, Mr. Schumer, you said under certain conditions you could reduce by 5% development of multifamily housing. Let's see, we believe that a 5% reduction in our development costs would allow us to offer 62% of our apartments at rents affordable to households at that 80% of AMI income level, which I think is significant, significant. And if, in fact, we could concentrate on multiple ways by which to reduce by 5% or more, or some percentage, we could get some of this done. So I would like you not to think purely about, the development of low-income, multifamily housing, and not think about these other kinds of issues, such as get right in the middle of support for infrastructure development with the federal government and identify specifically, I think you can do that, ways by which you have had to pay for costs that you never anticipated or costs that you should not have to bear because they want you to do something that perhaps the city could have done or the federal government could have helped with. With that, I yield back the balance of my time. Thank you.
There is no time left. Ranking member. The chair now recognizes the gentleman from Missouri, the chairman of the Subcommittee on Financial Institutions, Mr. Luke DeMeyer, for 5 minutes.
Thank you, Mr. Chairman. And just to follow up on some remarks of the ranking member, infrastructure is necessary for any sort of development that you do. So how you structure that infrastructure, who pays for it, is really important, and I agree with her to a certain extent. However, I know in my area, a lot of development is done with tax increment financing so that the cost is not borne by the individuals who do business with the commercial site or the people who rent apartments or homes already from whatever that area. So they use a tax whatever commercial development is in the area, the increased tax activity pays for the bonds to be able to build new roads, new water lines, sewer lines, or whatever, so that it's not borne by the people who do business with or rent apartments from. So, I mean, to me, that's a way that this can be done. I don't know if every state does this in the country, but Mr. Lawson, Mr. Schlomar, are you familiar with that? You guys are in the business.
I am familiar with that. It has different acronyms in different parts of the country. For the most part, in suburban and second-tier markets, it is not used for housing development. It's often used for commercial development, as you characterized it, whether that's shopping centers, office buildings, industrial facilities, and not geared towards housing development. So we have not utilized it, and it's not been an available avenue for us in any of our housing development.
Mr. Lawson?
I would echo those comments. I would also say that to get a tax increment financing district established, is a very political process and one that takes a long time and a lot of money.
I don't disagree with you there. I know a couple years ago I went to New Orleans and saw them and how they rebuilt their housing structure down there. And they have a lot of housing now that's the second and third stories, the buildings that they have the ground floor for commercial use. So I think that's an opportunity if you have mixed use of your structures that you could utilize this tax increment financing situation for the building and constructing in these certain areas. But just as a thought, I know one of the chairman made a great point a while ago, and he said good policy is not necessarily affordable policy, and I think that's what we're talking about today. Nobody denies that some of the rules and regulations are not well intentioned. It's can we afford this, and does it put more burden on people, businesses, whoever, than we can afford to be able to do. You know, one of the things, I chair the Financial Institutions Subcommittee, and we had a roundtable yesterday with regards to a new rule that's being promulgated. It's not yet implemented, although it's going to be done pretty shortly. That deals with how banks structure their loan loss reserve for anticipated losses. It's called CECL. And what it does is it causes them to look forward rather than backward as to whether when they make a house loan or a rural or a multifamily housing loan, whether they're going to have any loss in that. And then they have to reserve for that, which you have to segregate capital for. Now, you know, in the discussion yesterday, while the tax accountant guys with their thick-rimmed glasses and you know, Coke bottle jobs really thought this was a great idea. All the rest of the folks around the table who deal with this in the real world said, look, this is going to really increase costs. We may actually reduce the ability of us to provide services on certain products. And if you've seen at the banks already, they've gotten rid of a lot of small dollar lending. Some banks no longer do home mortgages at all. So we have another rule that's, while it's well intended here, and this is by a separate entity, this is not even a government, this is a separate entity out here, the FASB folks, who are looking at this. And it's actually going to impact, and we got a discussion going about the CRA, which is Community Reinvestment Act, whether the banks can comply with some of the requirements of that. If you go to CECL, you're going to restrict the ability to loan to certain folks because of increased costs. Have you all talked about this? Are you aware of CECL at all? Ever heard of it?
I have, but not in my role in development as a bank director. I'm familiar.
Okay. Are you concerned about it at all, as your role as a bank director, knowing what it could do to the folks that you do business with?
Absolutely, and the particular bank that I serve on the board of is a very financially sound bank, but it is the CECL requirements and the proposals have had concern over our ability to make as many loans, and to the extent that the bank would like to make loans, it's further restriction.
So if it raises costs, again, that's a cost that has to be borne by the developer, because the bank's going to raise the costs to do the loan to the developer, is it not?
Unfortunately, it's not even just borne by the developer. It ultimately is borne by the renter household in the case of multifamily.
Yeah. Or the purchaser of the home, if you're doing a home building loan. This is very concerning to me, and we had a long discussion on it, and hopefully we'll get some consensus. Mr. Chairman, my time is over. I thank you very much, and I yield back.
The gentleman yields back. The chair now recognizes the gentle lady from New York, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chair. Thank you, Mr. Chairman. Ms. Pody, while I agree that streamlining regulations can be important, the other side of the aisle often fails to look at the whole equation when it comes to affordable housing. Do you agree that the drastic cuts that have been made to programs like HOME, CDBG, Section 202 program, project-based Section 8, many of which successfully combine federal funding with private sector dollars, have exacerbated the lack of affordable housing in this country?
Yes, I do, Congresswoman.
And Mr. Lawson and Ms., I'm sorry, I just can't see from here, Ms. Ansel. I just would like to specifically bring the issue of the CDBG and HOME cuts, how those cuts have inhibited your ability to produce and preserve additional units of affordable housing.
So NMHC and National Apartment Association have been strong supporters for a number of years of not only reducing regulation, but increasing the funding to these, there's a number of programs, CDBG, the home, Section 8, there's a number of programs that can really help increase affordable housing and help those residents of the United States that need the most help. So we would agree completely that it needs to be a two-pronged approach to solve this problem.
So it's not enough to try to say here that is regulations that basically is the main factor for the lack of production of affordable housing in our country.
We think regulations are important, but we think there are more steps that can be done to increase affordable and workforce housing.
So, Ms. Pody, the Federal Financing Bank and Risk Sharing Program has proven to be a successful partnership between HUD, the Treasury Department, state and local housing finance agencies. And since its formation in 2014, the program has created more than 3,000 affordable homes in New York City alone, and more than 20,000 homes around the country. Yet, the Trump administration is considering letting this program expire. Do you know of any argument that can be presented to us that will support the elimination of this program at this time?
Given the drastic gaps we have in affordable housing, I can think of no argument for canceling that program.
And I can say that we have used that program.
Yes.
And it has been extraordinarily helpful. Its implementation has been slowed by the uncertainty of future funding.
Yeah, right, and that coming from an administration that is headed by a businessman. So in business, we need certainty, because without that, people will not make decisions whether or not to go ahead with a project in our districts. So I sent a letter to the Secretary of HUD asking for them not to let this program expire. And I hope that since we are so much interested in this committee and subcommittee about the affordability of housing in our nation, that we invite our chairman and the members of the subcommittee on housing sending a letter to the administration to not let this program expire. With that, I yield back, Mr. Chairman.
The gentlelady yields back. The chair now recognizes the gentleman from Pennsylvania, Mr. Rothfuss, for 5 minutes.
Thank you, Mr. Chairman. Mr. Schlomer, the ranking member talked about some of the data that you had in your testimony. I want to go back to it. You talked about a 5% reduction in your development costs would allow you to offer 62% of your apartments that are at rents affordable to households that earn 80% or less of AMI. This would be a significant increase from your current 51% rate. And Ms. Velasquez raised the issue of regulations. I want to get a feel for the scope of regulations and the extent to which they are a factor. What would be the main regulatory cost drivers that are impacting your developments?
Well, as my written testimony indicated, it occurs at both the federal and the local levels, and so I think you have to kind of break those down. I think on the federal level, again, as has been stated by everyone here, I think there's unanimity in our industry for support of fair housing and accessibility regulations and laws. However, the implementation may not meet the objectives that Congress has set forth. And one of my favorite examples, I came down a ramp here into this auditorium today that I expect meets the ADA accessibility of an 8% slope on that ramp. And yet when we build apartment communities, as opposed to a single-family subdivision that isn't subject to that ruling, we have to maintain a 2% slope throughout the development. I can cite specific examples where the cost for maintaining that 2% slope has probably added 2% to 2.5% to our overall development costs on a project. So just an application of maintaining accessibility standards according to ADA as opposed to the fair housing implementation, the policy that's implemented, would be one specific example. At the local level, there's been a lot of discussion by the committee as well as by the people testifying about the importance of consistency and reliability of regulations or programs. We find often at the municipal level that even after permits have been issued, new requirements are imposed upon us, and those are examples where we can't anticipate, and it slows, retards, or even eliminates development because of the uncertainty of implementation of rules, even after a permit has been issued.
I'm wondering if you or anybody on the panel might be able to cite some examples of local or state governments that have successfully facilitated more affordable housing construction through some type of regulatory reform. Anybody aware of any examples that we can point to?
There was an earlier mention of the development that occurred in New Orleans after the hurricane. And I think that what was important about that circumstance was the exodus of residents, the destruction of housing, and the clear shared recognition that new housing needed to be created. Whereas at the local level, there's often not that recognition of the need for housing. As people have used the NIMBYism term, they would rather see the jobs created in their communities and the housing created in another community.
Ms. Ansel, in your testimony, you discussed possible modifications to the CRA to facilitate more lending to affordable multifamily developments. As you noted, the CRA currently allows banks to obtain credit for multifamily units serving occupants with incomes of up to 80% of area median income. But you also noted that income information is not typically captured. How would you propose that the CRA be modified to address this issue and encourage more lending to affordable housing developers?
If you don't mind, I'm going to answer your last question first.
Okay.
So I think it's important to note that many municipalities around the nation are attempting different solutions. And while we applaud those different solutions, it's hard today to point to one that has been overly successful, but we would be more than happy to get back to you in written testimony as to the things that have been successful. With respect to CRA, I'd like to do the same thing. I'd like to provide a written response to you. It's a detailed answer, and I'd like to give you that full answer, if I might.
Appreciate that. Thank you. And I yield back.
The gentleman yields back. The chair now recognizes the gentleman from California, Mr. Sherman, for 5 minutes.
Ms. Ansel, the National Multifamily Housing Council and the home builders have put out this study saying 32% of the costs of building multifamily housing is attributable to costs of complying with local, state, and federal regulation. How much of that is federal regulation?
What we've identified in the study, sir, are the two federal pieces that create the most burden are OSHA regulations account for up to 2% of total project costs, and the second piece is, just a moment, I have that here.
I don't think anybody's calling for just eliminating OSHA.
No, sir, absolutely
okay.
not.
Go ahead.
Yeah. As we stated earlier, we strongly believe that.
Go ahead. What's the second?
The second piece. Just a moment, please. Let me find that. No, it's the change in building codes. So, change in the last 10 years, changes in building codes that have been directed by in conjunction with the federal government have increased costs.
You're saying these are requirements imposed by the federal government for subsidized flood insurance or financing. I'm not aware of a federal building code that applies to everybody.
No, examples of those, sir, would be, you know, as you know, there's a flood of regulations that impact apartments. So it's diverse federal agencies, including the Department of Housing and Urban Development, Environmental Protection.
I mean, if the federal government is going to insure it, guarantee its insurance, pay for it, we would have requirements. Ms. Podig, I know a couple dozen ways where the federal government can spend money and make sure people have housing. Do you know of any way in which the federal government can not spend money but still get housing for people? And which would you suggest?
I can't think of any.
Okay. Now, I know, I think it was Mr. Lawson, might have been Mr. Schumer, suggested changing ADA to provide a 2% slope instead of an 8% slope.
Actually, no, if I could just correct that.
Yes.
ADA requires an 8% slope, and FHA, the Fair Housing, imposes a policy of a 2% accessible slope throughout a development, and that may have not even been in code, but originated in policy regarding.
So you're saying this is a case where the ADA allows for an 8% slope, but another federal law requires you to just have the 2% slope, and the 2% slope, correct, I assume is more expensive for you.
That's correct.
Okay, so you've at least identified one thing the federal government ought to take a look at. Ms. Podig, we want to encourage more landlords to participate in Section 8. Are there regulations or HUD rules that burden landlords and make them unwilling to participate?
I think you've asked a really important question, and the Urban Institute most recently released a report on the ways in which landlords are, in fact, discriminating against Section 8 voucher holders. There are certain jurisdictions that have source of income protection for voucher holders, and what we found in our research is that, in fact, those local laws and regulations are enabling voucher holders to access more units. So those.
I think my question was more, are there rules that burden landlords and make them unwilling to participate? And you've identified a situation where landlords may be unwilling to participate, and we could have some regulations that force them to participate, which is an interesting answer, but not to my particular
Certainly.
Question.
If I might,
Ms. Ansel.
If I might answer that, the cost of the regulations that are required by the Section 8 voucher program create significant additional operational costs. For example, examples of things that impact, there's paperwork that's cumbersome just to get the verification for voucher amounts. That's not always, and it's dependent on the different localities, but that varies by market. So that takes time and additional effort to understand what the verification amount is. Members who participate in the Section 8 voucher program are required to use HAP contracts, which in many cases is different than what the other lease agreements that a property operation company would use. The inspection process for that Section 8 housing can be slow, which requires the owners to maintain vacancy, which is lost income. There are additional communications required with multiple third parties.
And then,
reporting.
That being said, Ms. Bonig brings up a good example. I think you were saying that, in effect, some cities require you to view Section 8 as a source of income to pay for the housing instead of excluding that and then excluding the resident as not being, quote, qualified because they don't have enough income.
That's correct, and it's intended to address discrimination that the Urban Institute has, in fact, documented happens against voucher holders.
Okay, thank you. I yield back.
The gentleman yields back. The chair now recognizes the gentleman from Illinois, Mr. Holgren, for 5 minutes.
Thank you, Chairman Duffy. Thank you all for being here. Grateful for your work and your testimony today. First questions I want to address to Ms. Ansel, if I may. There's been a lot of discussion around the shift from home ownership to rental, both of those in their 20s entering the housing market and baby boomers looking to downsize and shed the responsibility of home ownership. Wondered if you could talk a little bit about, do you believe that this growing preference to rent instead of own will continue? And if so, what reforms do you view as the most pressing for policymakers to consider when looking at ways to address this shortage of affordable multifamily housing?
Yes, sir. The demographics, a study by National Apartment Association, National Multifamily Housing Council, shows that there is going to be increasing demand for rental apartment homes because of a shift in demographics. There are, as pointed out earlier in the testimony, young adults are coming out of school burdened with school debt. Young adults are getting married later in life and having children later in life. Both of those are increasing demand for multifamily on the front end, and a number of older demographics, older than 45, are moving back into apartment residency. Primarily, this is because of lifestyle choices. A number of folks are recognizing that having a mortgage-free life is something that they would prefer. They're able to move for a job if a job moves to a different city. A lot of this has happened since 2008, so we believe that there will be continued demand for apartment housing. And I think we've talked about a number of different things that we can do at the federal level to reduce regulations, but other things that I would suggest that we consider is that we should retain and expand pro-development tax policies. I think we should support housing finance reform that preserves the multifamily mortgage liquidity provided by the government-sponsored entities. We should increase funding and support for housing subsidy programs, as we've talked about, and we should support funding for the FHA multifamily programs. We think all of those will help increase the number of apartment homes.
Great, thank you. Mr. Lawson, if I could follow up, and I think you've touched on a little bit of this, but I know the National Association of Home Builders survey referenced in your testimony estimated that regulations account for as much as 30% of development and construction costs, and in some cases can exceed 40%. How do we as a Congress make strides in reducing regulatory costs while allowing for independence and flexibility at the local level to be able to tailor regulation to the needs of the community?
Yeah. That's an excellent question, and we certainly don't have all the answers. Land use is a local decision. However, I do think what we need to do is look at each regulatory regime and take an honest look at what the costs of that regime are. We need to strike that balance. As all the panelists said, there is most certainly a place for regulation. But we need to judge the impact of those regulations on an economic basis very fairly. I think energy efficient initiatives are a great example. We could demand that every home install a certain type of energy efficiency appliance. If the payback is greater than 10 years, I would suggest that be a tipping point. If the payback is 30 years, 40 years, and I've even heard some people in the industry talk about 100-year payback, that is not something that strikes a balance, in my humble opinion.
In my last minute here, Mr. Slomer, if I could address to you, in your testimony, you discuss how your business focuses on suburban and secondary tier markets. These are not always the first to mind when you think of underserved markets. According to the map included in your testimony, your company owns 6 of these properties in Illinois. We talked about that a little bit with 3 in my district. When you discuss barriers to multifamily development, you actually use 2 instances in Illinois where infrastructure requirements increase the cost of 2 projects, one totaling more than $60,000. I understand that you may not be able to identify specific regulations at your Illinois properties off the top of your head, but wondered and would be curious to learn more about these Illinois examples and if any other state-specific burdens that your company sees as inhibiting for further development in the state.
Well, thank you. As my written testimony indicated, there certainly are certain infrastructure improvements that are mutually beneficial, whereas others are done to satisfy infrastructure demands that a community has identified, and they recognize that they can use that as a approval of a project as a lever. One of the properties either in your district or adjacent to your district required us to put in a new public street that was not necessary to service the property, but in fact alleviated existing traffic burdens that were in the market. It's entirely possible with the discussion that was made earlier about federal infrastructure programs that I know are a topic here, that the incentive may be tied to those infrastructure support dollars that come from the federal government, entirely related to the availability and the speed as well as the availability of approvals for multifamily improvements or developments within any particular community that utilizes those infrastructure dollars.
Great. My time's expired. I yield back. Thanks, Chairman.
The gentleman yields back. The chair now recognizes the gentleman from Michigan, the holder of the new position of Vice Ranking Member, Mr. Kildee, for 5 minutes.
Thank you very much, and I appreciate the recognition of the title of Assistant to the Regional Manager. Well, first of all, I apologize for not having been present for the for your initial testimony. So some of what I may ask may already have been covered. I know it's covered in part in some of the written testimony. But if I could start with Ms. Pothig, who we've worked together in the past, and you're familiar with some of my past work on housing development. I wonder if you might comment, and maybe the others would have some thoughts on this as well, on the particular challenges in weak and very weak housing markets. One of the advantages of stronger markets when it comes to development of affordable units in housing is the ability to leverage higher market rate rents to help subsidize or support the development of affordable units. In really weak markets, it's really tough to do that. And I wonder, that's just one example. I wonder if you might comment on particular federal involvement in supporting the very weak markets in trying to address this challenge, where often there actually is an oversupply of very low quality housing, and the question is really quality and affordability. I wonder if you might just comment generally on that subject.
Certainly, and thank you for the question. I think you raise a really important issue, which is the perhaps in some markets that are weaker, there may be existing supply of affordable rental housing, and the goal is to preserve and improve that housing so that it meets quality standards. But it's also about preserving existing subsidy, which is why preserving Section 8 properties in some of those markets is important, because a point I made earlier and that we make in our written testimony is that for every place around the country, whether you're a weak or a hot market, extremely low-income households face affordability gaps. And so that is the reason why I stress in my testimony the importance of expanding rental assistance to all eligible households. And I think that would address both weak market and hot market affordability challenges. And those can be coupled with other affordable existing rental housing, or they can be a stimulus also to the creation of new housing, because they provide a reliable supply of income over a period of time. And I think that that expansion of rental assistance could be a really good solution in weak market places as well. We go into greater detail on this in a new tool that we created called Penciling Out that I invite the committee to look at, that allows you to really understand the role that these different regulations play, but the role that subsidy plays in closing that gap.
Thank you. If I could just zero in on another particular point, because I'll run out of time. As Erica, as you know, a lot of my background previous to being here was in the development of public land bank authorities. One of the advantages that land bank partners bring to affordable housing development is that because it's a public entity, it has to measure all the externalities associated with development. And because public entities end up paying the high cost, the very high price associated with the lack of affordable housing, the concentration of poverty, all the associated social and economic impacts that local communities face, it makes sense, it made sense to me to have that local entity serve as a very patient partner with capital that's available to help underwrite the cost and essentially be a partner in the development of affordable rental and for sale housing. The problem is, I see it, and I'll run out of time, the work that I've done is very narrow and it's very focused, and it has really never, at least recently, we've seen some examples, but we've never actually seen it come to scale. And I know, Erica, you're somewhat familiar with the model that I helped to develop. Is there any thought about how to create local partnerships that can bring capital into this space on the basis that that investment actually saves so much more in terms of the negative externalities that come with the lack of affordable housing, and we just all pay such a high price. Somebody's paying. And I wonder if, I'm not sure I'm making myself particularly clear, but I wonder if you might just comment on how we might figure out a way to internalize those externalities and realize that we all pay such a heavy price. We hear so much about the cost of development, and I get that. But what we don't hear very much about, hear so much about, is the cost of all the ills, the social ills and economic ills that come from the lack of affordable housing. That's a very high price, and we haven't figured out yet how to bring that capital to bear to prevent those costs. Any thoughts?
Yeah. Just quickly, I think you're absolutely right, and there's very good evidence about the costs and consequences of particularly vacant land or vacant properties that are causing those externalities. So I think there are some interesting ways to think about using pay for success as a tool to bring capital to really address the rehabilitation of those properties as a way to internally do that. Because I think there's evidence that points to the health benefits, the safety benefits. I also think that there's a good opportunity to align with opportunity zones in some interesting ways. And so I would put that on the table as something also to consider as we think about those policy options.
Might I add on to that answer quickly? I know we're close to out of time. You know, the cost, the land cost for development is up to 25% of a total project cost. So if there is a way for the federal government to incent local localities to participate in a public-private partnership to create those land banks and put that underutilized land to work for creating affordable housing, it would create a win-win situation.
Thank you, and I appreciate the chairman's indulgence. It's probably because of the title that you gave me, the additional.
The gentleman yields back, and I was going to note that only the vice ranking member gets the latitude to take 5 minutes and 20 seconds to actually ask his question. 20 seconds over before we hear the response.
I've learned from the best, Mr. Chairman.
The chair now recognizes the gentlelady from Ohio, Ms. Beatty, for 5 minutes.
Thank you, Mr. Chairman, and to our ranking member and to all of our witnesses here. Thank you. I want to start by echoing the remarks of our ranking member on the full committee that today is very bipartisan, or should be with this issue, and it's certainly been very educational. I represent the 3rd Congressional District in the great state of Ohio, and in Franklin County within the Columbus metropolitan area. Central Ohio is expected to grow up to 1 million residents by 2050, mostly in and around Columbus, which is the fastest growing metropolitan area in the Midwest. And according to Zillow, the median income value in my district is up nearly 30%, and the median rent is up 22% in just about the last 6 years. A vast majority of Americans around the country haven't had a wage increase in decades, while housing costs, as you know, continue to skyrocket. I've repeatedly said in this committee and other forums, and I'll say it again, that according to the National Low Income Housing Coalition, there is no state, metropolitan area, or county where a worker earning the federal minimum wage can afford a 2-bedroom rental home at fair market rent by working a 40-hour-week job. And in Columbus, an individual would need to make $17.50 or more an hour to afford a 2-bedroom apartment. So I'm open to any ideas of how to fix this problem, but certainly cutting taxes and cutting regulations is not the silver bullet that maybe some people might think. You've been very informative here, but a lot of the responses to me have appeared to be more things at the local or the state level for a fix. So I guess I'm going to ask each of you briefly to tell me, what is the one change you believe that Congress at the federal level that falls within the purview of our jurisdiction that Congress can do to lower the cost of building multifamily housing in the United States?
I think one interesting idea to consider that would be in the purview and has been done within education reform is to think about a race to the top. To think about some kind of pot of money that localities really want. Maybe it is transportation money, but maybe it is in the housing space. And make it available to those states that do address some regulatory reforms that are impeding multifamily development. I think that's one idea that would be in the purview of the federal government.
Thank you, Congresswoman. I think you've hit the nail on the head in that we have two issues. One is an income issue, and the second is a supply issue. And so I think the federal government needs to look for ways to create partnerships with incent partnerships with the localities and private developers to create more supply. I think there's a number of ways to do that. Some of those that we've identified, I know you've asked for one, but development is a capital-intensive business, and so I would tell you supporting housing finance reform that preserves the availability of capital for multifamily development is one of the most critical issues that we can address.
Thank you. Gentlemen.
Yes, and I agree that you have absolutely hit the nail on the head. This is a 3-decade-old problem where housing costs have risen faster than incomes. I would say that the thing we could do most easily, and there is some legislation that has been introduced that would expand the housing tax credit. I would say we need to expand and enhance the housing tax credit. Expand it from a volume perspective and enhance it to reach a much broader array of incomes and specifically not have it fall off the cliff at 60% or in the case now 80% with income averaging. I think we need to address affordability on the entire spectrum.
Thank you, and I like that. I don't know if you know, I co-sponsored that bill. That was a piece of legislation that Congressman Pat Tiberi introduced, so thank you for that. I'm not sure if it went anywhere, so maybe I can get my chairman over here to take a look at that. You know, if my colleague could ask for a letter. I don't want a letter, I want legislation. So thank you for that. Last, I got 9 seconds, come on.
You're 9 seconds over.
One of the benefits of spurring more multifamily housing development is also the jobs that it creates. At our apartment communities, for example, there isn't an entry-level maintenance person that makes less than double the federal minimum wage as an entry-level wage and receives benefits on top of that. So by creating more housing, we're also creating more family-supporting wages. So I'd like to point that out. And then secondly, I made mention of gaining some consistency between ADA and FHA. I think that as a single item that you asked for us to name a single item that the federal government could do, that would be it.
The gentlelady yields back. We'll take a look at that. The chair now recognizes the gentleman from the great state of Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. Thank the ranking member and the witnesses for appearing as well. I think that Ms. Beatty has made some salient points with reference to wages, wage stagnation. Unfortunately, the benefits of the economy seem to be inuring to those who are at the top, and those who are in the middle and at the bottom don't seem to be making nearly the gains. But let's move to another topic. Federal funding for new construction of affordable housing. What impact has the lack of that funding had on the market itself? We're not constructing more with federal dollars. You have fewer houses available. Obviously, when you have a great demand and the supply is limited, you have an impact. What about federal spending? That's something that we can regulate. How does that impact the housing market?
I'll take a stab at that. I think it simply exacerbates the problem. Mm-hmm. We know that there is great demand for affordable housing. The statistics have long shown that many families are spending far more than they should on housing costs. The rent burden is very well documented. All of those things are, I think, a result of our market being out of balance. Simply not enough supply of affordable housing and a high demand.
Someone else care to respond?
I think, as identified in our testimony, NMHC and NAA are strong supporters of increasing the funding of the low-income tax housing credit program, and also recommend creating a middle-income tax housing credit program. The fact that those programs have been receiving less funding has certainly resulted in the fact that there is less affordable apartments that have been built. We've talked today about the ever-increasing cost of building apartment homes due to labor and commodity prices. And so to build more supply, the federal government has a very real opportunity to help create incentives that allow us to create those additional homes.
Yes.
And I would just add, there is not a county in the country where there is a balance of supply for extremely low-income renters. So even tax credit housing will need some source of subsidy to ensure that those households that make less than 30% of area median income, which is about an average $22,000 for a family of 4 across the country, but differs, can find a place to live. And so it is it's a package of the CDBG home dollars that provide the source of subsidy for the development to make it affordable, but more often than not, we're seeing that folks holding vouchers are also utilizing low-income housing tax credit properties. So it is a whole bundle of important federal assistance that is enabling the supply to be built. When it goes down, so too does the supply go down.
And just briefly, assuming that we do construct and the federal government plays its role, that goes beyond simply providing a place for someone to live. It impacts the economy in the area. Someone gets a job. That person then spends additional dollars. Someone has to buy the carpet. That person will be paid. There's a washing machine that's purchased, drapes. There's a benefit beyond the living quarters that we will receive when we invest in these kinds of projects. And I think too often we see this as simply a handout to someone so that that person will have a place to stay, if you will. But it's really more about economic development for a community. Anyone care to say just a word in the last 8 seconds I have?
I think you're absolutely right. And we have a web portal called How Housing Matters, where we look at all the relationships between how housing is a platform to achieve better outcomes for individuals and families and communities, that really assembles all of the research that underscores the point you just made.
Thank you very much. Mr. Chairman, you were very generous with the time. I owe you 22 seconds.
I'll find some time to take it from you, Mr. Green. Thank you for yielding back. This concludes our questioning portion. If I could just take a moment of personal privilege, I want to thank Chase Burgess, who has served on this committee for a number of years. He came here as an intern with John Boehner while studying at Miami of Ohio. Then he joined the Financial Services Committee as an intern after graduation and has worked his way up to a legislative assistant and now a professional staff member. I don't know why anyone would choose to leave this great committee and go to the outside and do other work, but Chase is doing that. But we thank him for his service and dedication to this committee, its cause, and to our country. So Chase, thank you. We will definitely miss you. We appreciate it. And with that, I want to thank our witnesses for their testimony today. I would just note that you might think that we never get along. There's no ideas that we can agree to, but if you listen to both sides of the aisle, there's an understanding that we have a problem and there's a pathway forward in a bipartisan fashion that we could craft a solution. We would look to you and others in this space to help us as we move forward to work on a bipartisan piece of legislation. So hopefully this is not the end. This is the beginning of a conversation that can have a real impact on affordable housing in America. So without objection, all members will have 5 legislative days within which to submit additional written questions to the chair, which will be forwarded to the witnesses. If we do have questions, we would ask that you try to respond in as timely of a fashion as possible. Again, thank you for your testimony and your time. With that, this hearing is now adjourned.